Alphabet is a $2.2 trillion company built on a single insight that if you control where people search, you control where the internet's money flows. Google processes 8.5 billion queries every single day, and 91% of the world's searches happen on its platform.
What makes that number remarkable isn't just the scale, it's the compounding. Every search makes the algorithm smarter, which improves results, which attracts more users, which generates more training data. The moat doesn't just hold, it deepens with every query.
Larry Page and Sergey Brin founded Google in 1998 out of a Stanford PhD project. The idea was simple: rank web pages by how many other pages link to them. That insight, PageRank, became the foundation of a company that would reshape global commerce.
Google went public in 2004 in a Dutch auction IPO that raised $1.67 billion at an $85 offering price. The structure was unconventional. Brin and Page wanted retail investors, not just institutions, to participate. Within months, the stock had doubled.
In 2006, Google made the most prescient acquisition in internet history, buying YouTube for $1.65 billion. Critics said they overpaid. Today, YouTube generates $36 billion a year in advertising revenue and is the second largest search engine on the planet.
Then came Android in 2008 and Chrome the same year. Two moves that seem obviously brilliant in hindsight, but were massive bets at the time. Android now runs on 3 billion active devices. Chrome controls 65% of the browser market. Google doesn't just index the internet, it owns the access points.
The 2015 Alphabet restructuring was Sundar Pichai and Larry Page acknowledging that Google had become too large to manage as a single company. Google became a subsidiary, and moonshot projects, Waymo, DeepMind, Verily, got their own governance structures.
And then in 2023, Gemini launched, Alphabet's response to the ChatGPT moment that briefly rattled Wall Street. The interesting thing isn't that Alphabet could build a competitive AI model. It's that they had been building it for years and had the distribution to deploy it at planetary scale overnight.
Let's break down how this business actually makes money. Google Services, which includes Search, YouTube, Gmail, Maps, and the Play Store, accounts for 87% of revenue, or $304.9 billion in FY 2024. The advertising engine underneath all of it is a machine with no real parallel in business history.
Google Cloud is the second segment, 12% of revenue at $43.2 billion and growing fast. Cloud hit 17% operating margins in 2024, its first year of scale profitability. That's a business that went from zero to $43 billion in less than a decade, and it's still in early innings.
The unit economics paint a picture of extraordinary financial leverage. Search advertising alone generates $175 billion in annual revenue. That's more than Netflix, Visa, and Costco combined. Free cash flow came in at $72.8 billion, a 20.8% margin on $350 billion in revenue.
R&D is $52 billion annually, 15% of revenue, going into AI, quantum computing, and cloud infrastructure. Most companies that invest 15% of revenue in R&D are losing money. Alphabet invests $52 billion and generates $73 billion in free cash flow. That's the definition of an economics of scale advantage.
The competitive radar tells a clear story on search. Alphabet scores 98 on search dominance, a near monopoly that Microsoft's Bing and every AI challenger has spent billions trying to crack. The regulatory exposure score is the wild card. Antitrust proceedings in the US and Europe are the primary risk to the thesis.
On AI integration depth, Alphabet scores 88, slightly behind Microsoft's 90 because Azure's OpenAI partnership has moved faster in enterprise deployments. But Google's Gemini is integrated across search, workspace, and cloud in ways that will take years to fully monetize.
The global network is genuinely planetary. Google Search operates in 190-plus countries. YouTube reaches 2 billion monthly logged-in users. Android is the default operating system for 3 billion devices. Google Cloud spans 40 regions across every major economy.
That network coverage means Alphabet can deploy new AI products, Search AI overviews, Gemini and Workspace, Vertex AI on cloud, to billions of users simultaneously. No other company has that distribution infrastructure for AI deployment. That is the compounding advantage that's hardest to replicate.
Sundar Pichai has been CEO since 2015, first of Google, then of Alphabet. He grew up in Tamil Nadu, earned a tech degree from IIT Kharagpur, and came to Silicon Valley through Stanford and Wharton. He joined Google in 2004 to lead the Google Toolbar project.
What Pichai built was Chrome, the product that gave Google its own distribution channel independent of search placement deals. Chrome launched in 2008 and within 4 years became the world's most used browser. That single product decision was arguably the most consequential of the past 2 decades of tech.
Alphabet built the world's information infrastructure on search advertising and has spent 2 decades quietly assembling the assets, YouTube, Android, Chrome, and now Gemini, that make its advertising revenue nearly impossible to route around.
The thesis for Google right now is whether AI makes the search moat stronger or weaker. If Gemini answers questions directly and reduces the click-through that monetizes ads, the core revenue model faces pressure. But if AI makes search more valuable and Google Cloud the preferred AI infrastructure, the entire ecosystem compounds together.
Alphabet reported Q1 2026 revenue of $109.9 billion, up 22% year over year, and ahead of the $107 billion estimate. Google Cloud crossed $20 billion for the first time, growing 63%. A $70 billion buyback was authorized alongside a 5% dividend hike. The DOJ breakup threat is resolved. At 18 times forward earnings, this is the AI infrastructure play the market has not priced.
Alphabet, Inc. was formed in 2015 when Google reorganized into a holding company structure. Google itself was founded in 1998 by Larry Page and Sergey Brin. The business operates through 2 reporting segments: Google Services, encompassing Search, YouTube, Gmail, Maps, Chrome, and the Play Store, and Google Cloud, which provides infrastructure, AI platforms, and workspace productivity tools. Other Bets houses Waymo autonomous vehicles and early-stage healthcare ventures. Nearly all revenue originates from advertising, with Google Cloud now the fastest-growing and highest-margin expansion unit in the portfolio.
At approximately $2.1 trillion in market capitalization, Alphabet is among the world's largest companies with trailing revenue exceeding $400 billion. YouTube reaches over 2.5 billion monthly users. CEO Sundar Pichai has led the company since 2015, building the AI-first infrastructure stack that now supports Gemini, Google Cloud, and the next wave of enterprise revenue.
Q1 2026 revenue of $109.9 billion beat the $107 billion estimate, a 2.7% outperformance. Total revenue grew 22% year over year. On an adjusted basis, EPS of $2.81 beat the $2.13 consensus by 32%. Google Search revenue reached $60.4 billion, up 19%. AI-enhanced search is growing faster than traditional keyword auction rates.
Google Cloud was the standout, $20.03 billion in revenue, 63% growth. The first time Cloud has crossed $20 billion in a quarter. Cloud operating income grew nearly 200% to $6.6 billion, with operating margin expanding from 17.8% to 32.9%. Pichai noted on the call that cloud revenue would have been higher if Alphabet could meet demand. The 63% is a supply-constrained floor, not a demand ceiling.
YouTube advertising reached $9.9 billion, up 11%. Subscriptions, YouTube Premium, Google One, and Gemini plans totaled 350 million paid subscribers globally. The Gemini app paid base grew 40% quarter over quarter. Enterprise AI plans are the primary driver.
Operating income reached $39.7 billion on a 36.1% operating margin, up from 33.9% in Q1 2025, a 220 basis point expansion. GAAP net income was $62.6 billion, inflated by a $36.9 billion unrealized equity gain on investments. Investors should track operating income as the core profitability metric.
Capital expenditure reached $35.7 billion in Q1, up 107% year over year. Full year 2026 Capex guidance was raised to $180 to $190 billion. Free cash flow fell to $10.1 billion as a result. Operating cash flow remains strong at $45.8 billion. The Capex surge is demand-driven. cloud backlog nearly doubled quarter over quarter to $460 billion.
The capital return announcement was decisive. A new 70 billion share repurchase authorization alongside a 5% dividend increase to 22 cents per quarter. The buyback represents approximately 3.3% of market cap at current prices, accretive at any multiple below the operating earnings yield.
Sundar Pichai joined Google in 2004 as a product manager and rose through leading Chrome, Android, and Google Search. He was named Google's CEO in 2015 and Alphabet's CEO when the holding company structure reorganized. Pichai is an engineer-turned-executive known for disciplined product sequencing. The Gemini ecosystem build-out and AI mode integration into search are the signature initiatives of his current strategic cycle.
Analyst consensus heading into Q1 was 35 buy ratings, 9 holds, and 0 sells. An unusually unanimous bullish stance for a company at $2 trillion in market cap. The average price target was approximately $212, representing approximately 19% upside from current levels. No analyst downgraded following Q1 results.
The bull case among sell-side analysts centers on cloud re-rating. At 18 times forward earnings, Alphabet is valued as a mature advertising business. Cloud growing at 63% on a $20 billion quarterly run rate means it could cross $100 billion in annual revenue by 2027. Analysts argue that cloud alone at that scale would justify the entire current Alphabet market cap at 20 times forward earnings, making search and YouTube free options.
Morgan Stanley maintained outperform with a 210 target, arguing that cloud's 33% operating margin creates a valuation catalyst. Each quarter that cloud margin expands, the probability of a sum of parts re-rating increases. Investors begin to apply a higher multiple to the cloud segment, separately from the lower multiple advertising business.
More cautious analysts focus on the DOJ ad tech case. If a court orders divestiture of the ad exchange or publisher-side ad server, the advertising ecosystem efficiency that makes Google Search so valuable to advertisers could be structurally disrupted. The ad tech verdict, expected mid-2026, is the single largest remaining regulatory overhang on the stock.
The Q1 consensus takeaway: the quarter validated the AI flywheel thesis. Gemini drives search engagement, search revenue funds cloud infrastructure, cloud attracts enterprise workloads expand Gemini monetization. Analysts expect this cycle to compound through 2027 with minimal incremental capital.
The bull case is a cloud re-rating argument. At 18 times forward earnings, the market is valuing Alphabet as a mature ad business. Cloud at $20 billion quarterly is on a path to $100 billion in annual revenue by 2027. At that scale, cloud alone would trade at 20-plus times earnings. Embedded in Alphabet's current multiple, that growth premium is invisible.
AI mode in search is a structural moat. Gemini is embedded into Google Search across over 1 trillion queries annually. Unlike search challengers who must build both the AI and the distribution network, Alphabet built AI on top of 90% global search market share. Monetization of AI-generated overviews through premium advertising placements is still in early innings and represents incremental revenue at high margin.
The buyback compounds the thesis. $70 billion authorized on a $2 trillion market cap is 3% annual float reduction. With operating cash flow running at $45 billion quarterly and internal funding for the Capex ramp, Alphabet reduces its share count while growing earnings. Per-share growth accelerates without requiring multiple expansion.
The bear case starts with Capex. $180 billion in 2026 Capex means Alphabet is investing more cash than it generates annually. Free cash flow collapsed to $10.1 billion in Q1, a 73% decline year over year. If cloud acceleration does not materialize on schedule, the Capex ramp becomes a free cash flow suppressor for multiple years.
The DOJ ad tech case could reshape the advertising ecosystem. If Alphabet is ordered to divest its ad exchange or publisher-side ad server, the integrated stack that makes Google Search efficient for advertisers and profitable for publishers would be disrupted. The structural efficiency compounded over 20 years could be unwound by a single court order mid-2026.
Search monetization faces a secular challenge. AI assistants from OpenAI, Perplexity, and Anthropic are directly satisfying queries that historically drove search traffic. Google's own AI overviews may cannibalize clicks per query. Monetization per AI interaction is structurally lower than traditional keyword auctions. Search revenue growth could slow even if query volume holds.
Currency risk is under-discussed. Approximately 45% of revenue is generated outside the United States. A sustained dollar strengthening against the euro, yen, and emerging market currencies creates translation headwinds that offset organic growth. The Q1 beat was partly organic outperformance and partly favorable currency comparisons versus a weak dollar prior year period.
The most direct peer comparison is Microsoft, Azure growing at 40% versus cloud at 63%. Google is winning the cloud AI infrastructure growth race by a wide margin. Microsoft trades at approximately 25 times forward earnings versus Alphabet at 18 times, despite slower cloud growth. The valuation gap is driven by enterprise trust in Microsoft's Copilot integration, not superior fundamental growth.
Meta is the advertising peer. Both companies participate in the digital advertising duopoly. Meta growing advertising revenue at 33% in Q1, Alphabet's advertising growing at approximately 19%. Meta is growing faster in advertising because short-form video is taking share from Google's display and YouTube pre-roll inventory among direct response advertisers.
Amazon Web Services, the global cloud leader, grew revenue at 28% in Q1 2026 versus cloud's 63%. AWS generates $37.6 billion quarterly, nearly double cloud's $20 billion. But cloud is closing the gap at a rate that puts rough parity within 3 years at current differential growth rates.
Apple is an indirect but meaningful AI competitor. Siri's integration with Apple Intelligence across 2.2 billion iPhone devices is a direct threat to Gemini's consumer AI ambitions. If Apple locks users into an Apple-first AI assistant at the device level, Gemini's consumer subscription growth could face an installed base ceiling outside of Android and Chrome.
Options market activity heading into Q1 was notable. The put-call ratio settled at approximately 0.75 in the week before earnings. Mild bullish sentiment in a name with elevated implied volatility from DOJ overhang. Post-earnings, call volume at the $190 and $200 strikes for June expanded materially as the cloud beat drove immediate options repositioning.
The post-earnings options flow is directionally significant. Calendar spread buyers positioning for cloud re-rating over 6 to 12 months outnumbered short-dated put protection buyers. This is the signature of institutional investors, building long gamma exposure, expecting continued positive data from cloud metrics rather than anticipating a reversal.
Insider activity at Alphabet is structurally limited because co-founders Larry Page and Sergey Brin together control approximately 51% of voting shares through Class B stock and rarely transact publicly. No material open market transactions were reported from either principal in Q1 2026. The $70 billion buyback is the operative insider signal. Management believes current prices undervalue the cloud growth trajectory.
The 5% dividend increase to 22 cents per quarter is noteworthy for a company that only initiated a dividend in February 2024. The initiation and consistent growth signal Alphabet's commitment to capital return discipline. The yield is minimal at current prices, but dividend growth positions the stock for income investor ownership and compresses its effective cost of capital over time.
Alphabet delivered a clean beat. Cloud crossed $20 billion with 63% growth, margins expanded 220 basis points, and a $70 billion buyback was authorized. The AI flywheel, Gemini drives search, search funds cloud, cloud attracts enterprise, is accelerating.
The risks are real: Capex treadmill, DOJ ad tech case, and search monetization pressure from AI challengers. At 18 times forward earnings with 63% cloud growth, this is not priced for perfection. Watch cloud revenue and ad tech verdict as critical data points.
Everything today is for informational and entertainment purposes only, not financial advice. Do your own research and consult a qualified advisor before investing. All investments carry risk, including loss of principal.
Thanks for listening to Charged Alpha. Subscribe and leave a review if this was useful. New episodes every earnings season. Visit chargedalpha.com.